Hey everyone, and welcome to Momentum channel, where we talk about finances, investing, and personal development. In this video, I want to talk to you about Shopify. Shopify is a Canadian cloud-based e-commerce company that has currently over 800,000 users from around the world. In fact, their users are coming from 175 different countries. Shopify has grown massively. In fact, the stock prices ever since its initial public offering around 4 years ago has grown over 850%, currently trading at about $265 US.
Looking at Shopify's latest financial statements according to the quarter one of 2019, the company shows a total revenue of $320 million. That's a massive 50% increase from the comparable quarter in 2018. What's more, the gross profit dollars has grown by 46% to now $180 million for the company. This is compared to only $123 million of gross profit for Shopify recorded for the first quarter of 2018. As for the company's overall operating income, you can see that the company has shown an operating loss of $35 million, which is roughly about 11% of its revenue, versus a loss of $20 million or 9% of revenue for the comparable period a year ago. In fact, that just shows that the company Shopify at the moment is not a profit-making company, and in fact, it has some losses in its fiscal and of course in its quarter of 2019. The company has also shown an adjusted net income for the first quarter of 2019, which is equal to $10.3 million or 9 cents per share. When you compare this to 2018, back then, that same quarter, they had an adjusted net income of $4.2 million or 4 cents per share. As of the end of the March 2019, Shopify had $2 billion in cash equivalents, and marketable securities, compared to $1.97 billion as of December 31st of 2018. In other words, their assets are definitely growing since then. Looking ahead, and especially if you're an investor considering whether you want to invest in Shopify or not, you're going to take a look at some of the different metrics and ratios here. In particular, as for the value metrics, I want to bring to your attention one on the screen, which is the price to book ratio. Currently for Shopify, it has a price to book ratio of 13.70, which is a lot higher than what we have for industry. For those of you who might not be familiar, the price to book ratio, or P/B, is calculated as the market capitalization divided by the book value of the company. And the book value is defined as the total assets of the company minus its liabilities, preferred stocks, and intangible assets. In short, the price to book ratio is how much a company is worth. Investors use this metric to determine how a company's stock price stacks up to its intrinsic values. For Shopify, 13.70 shows that the value that this stock has is 13 times more than its actual intrinsic book value, which can be a little bit of red flag and something to certainly be mindful of if you consider or you want to get into this stock and invest in it. What's also interesting is looking at the forward PE, or the price to earning ratio. For Shopify, the forward PE currently is at 286 or close to 287, which is very, very high, you guys. Definitely something to be mindful about. On the flip side though, looking at how the market is reacting to this stock and how bullish or bearish they are, there's the two highlighted items that I'm showing you on the screen. If you can look at the 50-day moving average price. The 50-day moving average price for Shopify is $214 roughly, $213.99. And this price is actually quite ahead of the 200-day moving average. For the investors, usually when the 50-day moving average takes over the 200 and is beyond that, it's a sign that the market is bullish about the stock. And in this case, we can certainly see that that has been the case. In fact, Shopify stock has grown by 90% just over the past 4 months. And that's insane, you guys, and certainly something that a lot of investors are excited about with the prospect that this company has. As for the growth scorecard and where this company stands when it comes to its growth prospects, an interesting factor I want to bring to your attention is the current ratio here. Obviously, there are different ratios shown on this screen, but the one I'm going to focus more on is the current ratio. The current ratio for Shopify is at 12.5. A lot higher than what the industry has. This industry has at 1.57. The current ratio, for those of you who might not be familiar, is defined as the current assets divided by the current liabilities. So the higher this number, definitely the better, because it measures the company's ability to pay short-term obligations. It's also commonly referred to as a liquidity ratio. A ratio of 1 would mean the company's assets are equal to its liabilities. Ratio less than 1, that's danger because the company's liabilities are exceeding its short-term assets, consisting of cash, inventory, and accounts receivable. And on the flip side, a ratio of 2 or higher would mean that obviously then the assets are higher than the liabilities, and it's a good sign. For Shopify, oh my God, it's 12.5. It's a very healthy current ratio for this company, and a lot higher than its industry average. Another item that I wanted to bring to your attention, take a look at net margin. The net margin for Shopify is at minus 6.17%, which is worse than the industry. The net margin is defined as the net income divided by the sales of the company. This shows the percentage of a profit a company earns on its sales. The reason that this is a negative percentage for Shopify, and of course, maybe even as you can see for the industry, is the fact that although the companies are having massive revenues, they're still loss-making. They're in a kind of a transition phase, and gradually are getting to that level where they're starting to make profits. Having said that, the fact that their return on equity and of course also their the growth prospects that these companies have, certainly they have to also be taken into account when analyzing the stock price and the future of a stock. Some of you, and I've heard actually myself in a lot of articles comparing Shopify to Amazon, and the big question, is Shopify going to have a future similar to Amazon? Is it going to ever be able to replicate the massive success and huge potential that Amazon has shown to the market and kind of follow in the footsteps of Amazon? That's $1 million question. But looking at history and the trends, if you look at Amazon is a massive company with close to $1 trillion market cap, currently at $966.18 billion market capitalization, and with a price to earning ratio of 81.87. As for Shopify, it's a lot smaller than Amazon. It's only at $30 billion. Still considered a very decent size, but huge potential for this company for sure. Looking at the price of the stocks, the Shopify stock, its 52-week high, the one-year highest price has been at 266. Its current price at 264 is very close to that 52-week high price. So definitely for investors, that's something to be mindful of. The price has had a massive run. At this valuation, at this price, it might be a little bit risky to get into. You might want to park your money and wait for the prices to drop a little bit before you pull the trigger and try to consider perhaps buying into the stock. As for Amazon, there's still some gap. The 52-week high price for this stock has been at $2,050. So currently there's roughly about $100 less than that, its highest price in 52-week. One element that I wanted to point out here as well, when we look at the 5-year price trend for the stocks for Amazon, 5 years ago it was valued, the stock price was around $292. Somehow it reminds me of the current day price of Shopify. It's not quite at 290, but it's at 264. But look at how much Amazon grew in the past 5 years. The stock prices grew by more than 550%. right now close to $2,000 in price. Shopify hasn't been even there for 5 years. In fact, the IPO was in early 2015. So within the past 4 years, a little less than 4 years, the stock grew massively from around 228 US dollars to right now close to 264, showing a growth of 850% plus in less than 4 years. That's a growth, average growth of 200% per year. If that's not amazing, what is amazing? You can tell me that. But having said that, you don't want to get too excited about the companies like these Shopify. You want to always be cautious because as much as I believe Shopify has a huge potential and a huge growth potential and growth opportunities ahead of it, you want to always also try to get into the stock at the right time. That's one thing that successful investors like Warren Buffett does. He tries to identify the companies that have huge potential, they have the companies that have good management, the companies that are amazing companies that are going to stay there for long term, but then not blindly getting into those companies just because this is a good company, but rather waiting on the sideline and trying to get into the company at the right price. So it's up to you to decide whether Shopify, Amazon, or any other stock or company is the right company for you to get into and invest in. And if that's the case, you might want to do some research and decide what price is the right price for you, that you're comfortable and you think that that's the right price to get into investing in that. I hope you enjoyed this video, guys. If you did, please hit the like button and subscribe to this channel for more videos and audios about the stock market, investing, and personal development. For those of you who watched until here, I have a bonus piece. I'm going to include a recent interview that was done with the Chief Operational Officer of Shopify right after their announcement of the recent financial statements, where the stock actually reacted very positively to that. The investors and the stock grew dramatically. It's always interesting to hear firsthand from the chief the senior executives of the company, what their vision is for the company and what they think and what their prospect and hopes are for the future. I'm sure you're going to enjoy this interview. So without any further ado, let's take a listen.
Shopify wants to grow your small business, or as they call it, from first sale to full scale.
Shopify was built to help anyone that has an idea start a great business and sell to a global audience.
With a new partnership with Snap, will this small commerce captain navigate big returns for investors?
All right, look at Shopify. I was so excited this morning. I was walking the street when they printed their number. Got nearly $18, 8% today, to the point where it's now giving you a 39% gain since we last heard from them in February. If you don't remember, Shopify is a cloud-based software company that gives small and medium-sized businesses the tools they need to create their own online stores. Now, you know I've been a huge fan of this story, but even I didn't expect the company to report this kind of epic blowout that it delivered this morning. Shopify earned 9 cents a share. Wall Street's looking for a 4-cent loss. Higher than expected sales, up 50% year over year, probably the highest I've seen. And Management also gave you a very bullish forecast for the next quarter. Recently, the stock's become ridiculous. A battleground? What is that about? Tons of short sellers betting on Shopify would disappoint. Good luck. Those shorts capitulated today, adding more fuel to the fire of this incredible rally. Can you keep climbing? Let's take a closer look with Harley Finkelstein, Shopify's Chief Operating Officer, get a better sense of the quarter where the company said, Mr. Finkelstein, welcome back to Mad Money.
Great to have you here.
Good to see you. Good to see you. Okay, Harley, we talk about how what Shopify does. I think of it like this. Everybody's equal in Shopify. It doesn't matter whether you're a $10 billion, $100 billion company or some person tinkering. You have empowered more people than any other company I've ever seen. How do you do it?
Thanks for saying that. That's what we're all about. We're all about making it much easier for entrepreneurs to get started. So I remember the first time I got my first sale, I was in school. I was an early Shopify merchant, and I looked up on my email and saw that I had a first sale. And it was the most empowering moment of my life. It meant that I had freedom and I was able to pursue my life's work. And now that happens almost every single minute on Shopify across 820,000 merchants. And if you think about
820,000?
That's how many we have now. Yeah, actually a little more than that. And actually, if you think about it, if you aggregate all those merchants into one big big bucket, we're actually the third largest online retailer in the United States. So the reason that's important is because we're able to take those incredible economies of scale that traditionally the third biggest retailer in the United States could do, and we're able to trickle them down to entrepreneurs. So what we're doing is we're leveling the playing field. That means they get better rates on shipping and processing and capital. And now all of a sudden these small businesses can compete with the biggest retailers and brands on the planet.
You're helping them now with the gun, with the ammo too. I mean, because you've got readers, you've got things that make it so that they're equal to the big boys even when it comes to technology.
That's right. So our view is the future retailers retail everywhere. So what Shopify really is we're this retail operating system. You can come with us and you can build an online store, but you can also use our products to sell in a brick and mortar store. You can cross-sell on Instagram or Facebook or Amazon or eBay or anywhere, but it all feeds back into one simple and centralized back office. And that's where you run your entire business. Now that is something that wasn't possible even a couple years ago.
The analysts drove me crazy, the call, because they focus on that you might lose business to Instagram, but you obviously are like PayPal. You don't care about who gets it. It's your platform. It doesn't matter if Instagram helps. It's probably even better.
Yeah, so the more places merchants can sell, the better it is. What it does, it means that the complexity of retail becomes more complicated. And Shopify simplifies it because the more channels, the more things we can do to simplify that whole process for entrepreneurs. And of course, we have economics with all these different channels, and so there's still upside for us when our merchants sell across a whole bunch of channels.
All right, well, we were talking about 2019 has been the year, our executive producer Virginia Gilgan knows I speak about this all the time, where we're going to talk about empowerment, talk about companies that do things that are good for others. You lend, you actually stakehold. You mentioned it just briefly. I need you to tell more people about this because I think it's quite remarkable. You do good for them and it does good for you.
Yeah, so what we realized was a lot of these small businesses, they can start a business on Shopify really easily, but when they want to go and raise capital, whether it's for inventory or it's for marketing, no bank is giving them any money. And because we understand their businesses so well, we're able to deploy capital for them that they can then use to grow their business. And we've now given out more than $500 million worth of capital to small businesses who otherwise would never be able to get that type of money.
And what's the return?
The return for them is that they're able to grow businesses and they're able to compete. So you look at a company like Allbirds that's beating companies like Nike, and you look at companies like Bombas taking out the incumbents in the sock industry, or Kylie Cosmetics even, who's competing with the biggest companies.
That's you.
And so what we're really trying to do is level that playing field so that anyone that has a great idea and has ambition can build an amazing business.
But at the same time, the big boys have can't fight them, just join them, right? I mean, now the biggest names in consumer packaged goods are using you.
Yeah, that's one of the cool parts of what's happening right now. We're seeing companies like P&G and Unilever, and as I announced today in the earnings call, Johnson & Johnson, that are coming to us, that are building their own direct-to-consumer brand stores. Now, these are big CPGs that in the past would only go into big retailers to be resold, and now they're going direct, and so even they are taking a cue from some of the entrepreneurs, which we think is really cool.
Okay, so how does everyone young, I know, who's starting a business know about Shopify, but these short sellers don't know anything? How is it possible that people in their 20s know that their dream can be realized by Shopify, and people in their 40s and 50s say, I don't even know what that thing is?
Well, I think Shopify has been under the covers a little bit over the last decade or so.
Canada, not promotional, what?
Maybe that we were Canadian. We mentioned a little bit about the Canadian modesty in the environment up there on our last time we spoke. But generally, I think people are starting to realize now what Shopify is doing. Shopify is the entrepreneur company. We're the company enabling entrepreneurs everywhere, big and small. And frankly, for those short sellers, I think a lot of them are distorting information. They're not correct. And frankly, the fundamentals look really good. Our revenue was up 50% year over year. GMV was $12 billion for the quarter, up 50% year over year. And we get more and more merchants from all over the world today, and it's really exciting.
I have to tell you that we go out to Silicon Valley a lot, and I always ask, what company would you like to buy? What is the company that they most want to acquire? All of them, I'm talking about supply chain people, but I'm also talking about cloud-based. They always they mention Shopify, but you are not for sale, right?
We're not for sale. We want to build a 100-year company. We think we are just getting started, and frankly, this last quarter was a great start to the year ahead of us.
Okay, so people say, well, wait a second, Jim, they're up against Amazon. There's no room. That's just a false dichotomy, right?
Yeah, look, Amazon's a big marketplace, and we have merchants who cross-sell on Amazon as well. But if you're a merchant in 2019, you need to sell everywhere. You have to also own the relationship with your customer. When you go to a big marketplace, you rent customers in the marketplace. When you build your own online store or your own physical store, you own the entire customer relationship. You own the profit margin. You own that customer is your customer. You can remarket to them. And frankly, that is a much better business model than just selling on a single place.
I know I got 1 minute left. Give me one great story about someone who had nothing, has created something. and did it with your help.
Yeah, probably one of the best stories I like to talk about is someone named Debbie Sterling. She created a company called Goldie Blocks. And what Goldie Blocks did was she was frustrated by the fact that she couldn't find toys to inspire little girls to become entrepreneurs. And so she actually started her store for the Shopify Build a Business competition a couple years ago, built this amazing business. We had a business competition to inspire people to create businesses. And Debbie created Goldie Blocks on Shopify and has grown to be one of the best toys on the planet, competing with Mattel for business. And she did the whole thing on Shopify. Another one is Movement Watches. This is a company started in 2014 on Shopify making watches, and a couple months ago they got acquired by Movado for $200 million. Movado couldn't compete with them, so they bought them instead. And I have 820,000 stories just like that happening on our platform every single day.
You make me happy.